Hi again, O2ers! This is now our last video for inventory valuation. This time, let's take a look at the Anglo-Saxon method. So the main difference between this method and the continental method is that the recognition of the costs of goods sold immediately goes to the profit and loss in the latter method. However, in the former method, it remains on the balance sheet as long as the goods are not sold. Then it goes to the profit and loss again the moment the customer invoice is processed in order to recognize the margin. So let's have a look at how it looks in O2. Prior to accessing our purchase application, we need to go first to the accounting application, then go to configuration and then settings. From here, search for the Anglo-Saxon method and make sure that it is checked. Additionally, search for the stock valuation and activate automatic accounting to provide the option for manual or automatic inventory valuation in the product category. Then don't forget to save it. Now let's open the purchase application and have a look at our products. So we have multiple products available here. Let me just open one. From here, we can narrow down on the product category where we can view all the accounts that will be used to generate the accounting entries. So we are currently set to standard price. And as I've mentioned earlier, we now have the option here to either have manual or automatic inventory valuation. Now let's try to create a new purchase order. Let's just fill a vendor over here and select the product. Once we confirm, we will now check what happens in accounting. So when you access the accounting application, navigate to the accounting menu, then go to journal entries. As it appears, nothing happened yet, so perhaps something will only transpire once the goods are received. Basically, when we validate the receipt of these items, that's when the products are added to our inventory. So let's go back again to our journal entries. So here we have it. There is already an accounting entry that basically places the goods on the balance sheet with the corresponding entry, the input account. Moving on, we are now to register the bill. So let's just put the bill date over here based on the purchase order. And then once we validate the bill and then look at the journal entries, there is an additional entry over here for the bill. And here is what's specific for Anglo-Saxon accounting because we are not to use the expense account. Instead, we are going to use the input account in order to neutralize it on the balance sheet. So let's go one step further and sell the goods. So go to sales application and create a new sales order. Choose a customer, add the product, and then confirm. At this point, there won't be any entries yet. However, once we deliver the goods by validating it, a new entry will be created. And we will see we have the outstock, which basically removes the goods. After that, we'll return to our sales order and create an invoice. So just let it generate and then confirm. Once we confirm this, we're going to make sure that the costs of goods sold comes in expenses in order to generate the margin. Now, if we access the journal entries in the accounting, we will find the entry for the customer invoice. And when we open it, we can see in the journal items that the cost of goods sold are recognized against the balance sheet account and the margin is also recognized. So that wraps up my discussion for Anglo-Saxon method. See you in the next one. Bye!